So now we're going to look at what I think is almost a textbook example of really just keeping things simple with the sort of these concepts that we're learning, with diving a bit deeper into internal structure and then utilizing that with order flow. Obviously, we can use that in quite a complex way, and we can make it as complex as we want. But really, we want to kind of ultimately keep our trading as high probability as possible, and more so using that framework and that understanding just to assist what we were already doing. To be focusing mainly on those pro trend runs in extremely well-priced areas from very high probability, higher time frame POIs, right? In order to boost our strike rate and to increase the average risk reward in which we actually bank, because we have a much better expectation of how far prices to go and what we want to see for when we're looking to get involved, rather than necessarily having to try and get into every single internal pullback, because although we can read them, it doesn't mean we have to trade them. So anyway, what we're about to look at is kind of as simple as I would probably like you to keep it when you're first, trying to introduce this into what you're already doing with your trading, okay? So don't worry about doing we're not going to bother doing like a whole full-time frame analysis here. We're just going to look at the M15 and the M1 just to kind of try and illustrate my point. So we have a bearish swing breaker structure to the downside. We then have a bullish breaker structure to the upside, right, as we take out the swing high. And we're viewing this as one big bullish swing leg up. And then we're having a swing pullback. So what's our very basic understanding? We want to catch the pro trend M15 swing high low to then target the weak high up here. So we're coming down into extreme demand. We have this extreme pivot demand zone here. We can see after it was created, price moved up, filled up some of those orders, and that led to a pretty powerful and strong move into that breaker structure. So whilst, yes, there could still be orders within here, and I would be more than happy to look for longs from here, right, if price came down into it because it's extreme, etc., etc. The 50% hasn't been mitigated. I'm aware in the back of my mind it's there. So typically what I'll do is I'll drag it across because it's not completely unmitigated, and I'll focus on the next unmitigated zone, which would be this inside bar, which we can see led to the swing breaker structure, right? So we know that it's a strong zone. What also did it do? It flipped this supply zone here, right, which is a strong supply zone that led to a breaker structure. Price then came back into that supply, reacted, fell to a lower low, demand stepped in, flip supply, led to a breaker structure. Now, it doesn't have any structural inducement and it didn't sweep, so that is some negative confluence. But all in all, right, if this M15 swing high low is going to happen, it's going to have to happen really from here, or potentially, it may push deeper into the zone. So all in all, a pretty damn decent, damn good level to be looking for longs from. Now, following, our bread and butter setups, following, i.e. the beginner trade plan, as soon as price enters a high probability, well-priced POI like this, we are more than valid, obviously depending on what's in your plan, but the majority of us can drop down to the M1 and begin to look for our M1 entry model to get in long. And that's fine. I'm not saying you shouldn't do that. What I'm saying is this is an example in which we can use some of these new concepts to potentially help us boost our strike rate, right? And not getting potentially too early. So what's one thing we can do in order to boost our strike rate and not try and catch a full knife? Well, we can wait for an M15 change of character. Okay, cool. So let's look at that. Well, since that break there, all of those candles have just broken the prior candles low. All right, so for there to be a bullish change of character, we would need to see this high go here, right? So let's see what happens. Let's wait for a chalk. Okay, so we take that low, which now means our chalk level would be here. Okay, and then just about get a bullish chalk there. So maybe then you could drop down to the M1 and look for some longs within this wick, right? Maybe there's some demand within here, and maybe you could get long already. Now we've got a bit more of a convincing break, right? Now we're really starting to move up. So again, maybe you could wait for price to pull back in, like on the M1. I won't drop down now, and you could be looking for M1 entry models. And again, that's absolutely fine, right? We've potentially slipped something within that low. We've led to a bullish change of character. We pull back in. That could be clean. That could be an entry. Again, nothing wrong with that, right? But now when we understand, looking at the slightly larger internal structure and looking at order flow, what can we see? Well, we can see pretty much, this is all throughout Asia. We've just been selling off, right? Clear bullish order flow. I mean, this is pretty corrected. There's not too much structural lows and highs for us to work with, but then we've got a sizable pullback there, and then we've got the movement, right? So if we draw on that as our sort of nearest internal breaker structure, I'm just going to use a dotted line for that. What we can see is that for the internal structure, the large internal structure to shift bullish, we would want to see that high go, and that can give us a lot more confidence. Just going to get rid of the lines just to keep nice and clear. Why? Because we still have bearish order flow, right? That's the last supply range, and we haven't cleared that out. And you can even see like a strong inside bar level there. I'm going to use just this red so we can keep it nice and clear what I mean about supply ranges and then actual individual supply zones. So we've come into a nice strong level. We've had our bullish M15 change of character. So that's a decent amount of confidence, right, to look for longs typically. And that could be the move that goes. But let's say we want to boost our strike rate a little bit more and we want a bit more confidence. Then really we want to see what? We want to see that internal breaker structure, because then that will shift from order flow from bearish to bullish. And then we can look for that movement. Because what that change of character can signal, remember, a chock just tells us that there might be an internal pullback. It's only when we get the IBOS that then the swing pullback is finished, is over, right? So that's the thing. So if we play this forward, then what happens? Chop around, not much going on, and then we dump down, right? But we're not surprised. Why? Because we understand that order flow is bearish. So then we get another, draw it on, I can get the tool, internal breaker structure to the downside, right? So we had what? We had a lower low, lower high, lower low, mitigated that prior range, right? This being that strong internal lower high, and now we've continued that movement to the downside, right? So then we have this, supply range here. Okay, so now what we'd want to see is what? We would want to see, this would be our IBOS line. We would want to see that go for there to be a bullish IBOS to disrupt the bearish order flow, right? You can see the series of mitigations there. So we've pushed deeper into the zone. We've actually swept the zones. We've actually broken lower, but we know there can be orders within here. So we can move this out of the way, right? Potentially we've swept some liquidity below this low. Let's see what's going on. Okay, we're going to close. Yeah, nice big bullish close. So that's a bullish breaker structure. Sweep of liquidity. Bang on London Open, 8 a.m. All right, the order flow has now shifted from bearish to bullish. Right, put this forward a bit, and we moved up. So now how you can see, getting long from in here now is much higher probability, bring it back a candle, than beforehand. It's not to say that you can't drop down to M1 as soon as we come in, and it's not to say that you can't look for longs after a chock, but it's just about understanding what's going on. That in this instance, you can see that order flow is bearish. It's very likely we're just pulling into here and then to potentially continue lower. But once that then shifts, right, and you break and close above that high, now the internal structure and order flow is aligned with the swing structure, and that's when it becomes much, much higher probability to get involved, right? And then you could literally, you don't even have to go down to the M1, right? You've now got a high probability M15 confirmation entry with order flow on your side, and you can get in long, right? Even if you enter on the distal, let's see, decent risk reward up into the swing high, etc., or you can refine it to EQ, blah, 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 right? We're not gonna get into entry models now. And yeah, you can get into the trade and away we go, right? So I'm not even gonna drop down to M1. You guys know the entry models and stuff. It's more just about understanding how we can utilize this with our analysis of the higher time frames, right? So then, we get another IBOS here. And then what would we expect? We would expect potentially this was bearish. Now you can draw it like this, from bearish to bullish, right? From where we then break out, that demand range then gets mitigated. And then we have this range here, which hasn't been mitigated, but remember, price doesn't have to pull back, especially when momentum is strong. And then we had one here, right? And then that could have been your continuation, right? You could have looked for an aggressive continuation within here, right? Getting long in within here. Go and drop down on the M1 entry models to see if you can see anything within there. Now at this point, we start to pull back, but what would I be expecting? Well, look at the swings in price. Bullish order flow, break up, and then one leg up here. So I would be expecting that price could come all the way down to this strong internal low and still continue bullish order flow. Yes, there is some little pullbacks here, but I would just view that as small internal structure of the larger internal structure, right? So let's, play this forward. We have some demand zones within here. We could be looking at this decisional demand. I'd obviously be aware that there's an unmitigated wick as well. Let's get rid of this for a minute. And then we can expect price to potentially pull back into here. Comes into here, and then again, we can look for longs, right? To get involved, etc., target the weak internal high. And now we have what? A new demand range. I realize I'm talking with a really annoying voice. So apologies for that. I'll try and stop doing that. But it's because I'm trying to talk slowly whilst I draw. My fingers are not as quick as my voice. So yeah, and then we just continue that. Obviously, this isn't a foolproof model. At some point, it's going to fail. You need to take everything else in consideration. We haven't looked at higher time frames. We haven't looked at where we are, et cetera, et cetera. We've got extreme supply, even though it's a weak high. Like, you obviously have to take into account other confluence, but it's about using this framework and understanding what can happen, right? Because now, we know the new range we are within. The internal range would be this low and this low. So this then becomes your protected internal low. That then become your next sort of high probable area to potentially look for some longs from, right? And we pull back. And then, you can play around with this internal structure as well. Like, if ultimately price is probably going to want to come down to mitigate this range, you can trade within that. We get this obviously internal within internal structure. So we have a bearish movement within here. Let's do that and get rid of the lines, right? And then see what happens. We pull back. So this is what I mean. You could, in theory, if you wanted to, if you really want to look at the bigger one, so we can get a bit more advanced. Keep talking like that. I need to really stop doing it. It's really hard. And then from, you've got ranges within ranges, and this is where, you can look at those ones, you can look at these ones, and this one we'll get a bit more into, but I kind of want you to just focus on the main thing I'm getting here is keeping it simple, looking from the pro trend swing longs, and then following the bullish internal structure, right? Higher high, internal higher low, internal higher high, and then ultimately we're looking for that. But you've got the internal structure that's bearish within that. So like, let's say we want to get long from here, we use the same concept as we did before to try and get our strike rate as high as possible. Of course, as soon as price comes down into here, we could look on the M1. Do we get a break there? Not yet. Now we do. If that closes. No, it doesn't. But essentially, let's see. How does that go? I can't even remember now. But you can see the bearish order flow kicking in, right? The internal of the internal. But ultimately, we're still within what? We're within this bullish range. And that's why if you're selling these supply ranges, you have to be aware of the bigger picture. Because ultimately, you're expecting this to be a strong internal low. And this is why you might want to label all of these, and that being the weak internal high. And that being the weak swing high. It doesn't mean they're going to get run, but that's the framework that we use to bring a method to the madness, because ultimately this looks like quite choppy sideways price action, which is what it is. But when you have that framework, right, so what happens here? Chop around, chop around, chop around. And this is what I mean. Ultimately, it's a big range bound condition, so it's not high probability at all, but we can use these to make some sense of it. So like I was saying, at this point here, that would be ultimately our target, and we would expect this to hold. But right now, the internal of the internal is within this range, right? So it's not until this range goes that then technically we would then have the internal of the internal aligned, right? So this leg would then be aligned with this leg, right? Once we break this high, then we can expect those bullish ranges to hold until that high is taken out. Okay, and this is why it's quite messy, but it's there. And obviously there's smaller ranges within that. Like, you could start to trade, especially as we come into this strong level, you can start to trade this smaller order flow within it. Whoops. So from that low there, zoom in a bit. All right, and then from that high to that low, and then that high to there, where it breaks out the range. All right, and then you got another one here. And you can be trading all of this. You just have to manage your expectations of what's going on, how far to push price, and how much confluence you're going to wait for. And then, yeah, that would be that range that we'd be coming back into. Right, so it continues. Right, so then that gives us another demand range. But now we have to be aware what? We're coming into, this is a strong high. This is the internal of the internal. But ultimately, what do we expect? We expect this range, this larger range, is stronger than this internal range. Sorry, this internal range, right? And then this swing range is stronger than all of them, right? So the swing range is the strongest, and that's bullish. So we expect this weak high to go. Then we have this larger internal range, which is the next strongest. And then we have the smaller bearish internal range, right? Which is the next strongest. And then within that larger internal range, what do we have? We have these small bullish ranges now, where we switch bullish, right? So at this point, we're coming up into what is a strong high. But it's only once this small green structure here, right, if it was to shift bearish, at this point, then what would you expect? Then we know that this low has failed to take out the high, and order flow, these small order flows switch bearish. So then we would expect that order flow to stay bearish until that low goes. Whereas if this small green order flow continues and we take out that high, then what's happened? Then we've broken bullish here, and then we'd expect that larger order flow to stay bullish until it takes out this high, right? And then that would be that larger green structure, which we then expect to hold until it takes out the swing high, right? And you can understand that's the fractal nature of it, but all in one time frame because we've got one big massive range. So let's play this forward a bit. So we break out to the upside, all right, giving us another range. Just rein this in for a minute. That's where it broke. Okay, and then we continue up. So we have another range. And then what happens? So we come back into the range and then we break out of it. So you see how we break the low of the range? So what's happened here? So let's draw on this one as our supply. Just see what's going on. So from the high to the low, and we drag it across. So we can see that this bullish order flow is being disrupted. Did we get a bullish IBOS? No, we failed to close above it. So this is where now we can hypothesize that that's likely going to be a sweep. This small internal order flow has now shifted bearish. It's failed so far. I mean, it did price to break above, but it's failed to close. So now with our framework, right, this now could be weak. The order flow has shifted bearish. So now we could expect these ranges to hold until this low goes. So now we move down, we pull back, and we break out. And it goes in one big sweep. I think there was news or something that day, right? So I'll leave that there. That's the framework, but you can see how you can start to build the story. So you can make it as complex as you want and look at all of these little ranges within ranges within ranges. But the main one I wanted to focus on was the first sort of 5-10 minutes of this video where like, you know, we have our high probability POI. We're well within our rights to be looking for an M1 as soon as it gets in, right? But it's about understanding when you want to wait for a bit more confidence, right? Whether that be your first level being more just a bullish M15 chalk rather than M1 as soon as we get here. So we got that there, but that ultimately would have led to probably a break even or a loss, right? Let's just call it a loss. So then we had, remember at that point we had this supply range, but then we broke out of it and we got the bullish IBOS, which then gave us this green demand range here, right? Price then broke out of that, giving us a bullish IBOS. Now it's aligned with swing structure, so now we can start to target this weak high, right? So then we get that pullback, we get that big movement up here, we get the pullback, we protect that strong low, it doesn't get breached, and then we get another one. So then we're within what? We're within the larger internal range, so then we expect that this low should hold, okay? So then we get bearish order flow within that, right? And even within that, you can see the smaller ranges, right? There's obviously more to it. Again, another one. So we get the larger, or the smaller internal order flow of the large internal order flow. And again, within that, right, you can trade these. On the M1, there's enough room whenever you got to manage your expectations that potentially this high could hold to continue that red order flow, right? It tries to break out the high. As soon as it fails to break and goes above, then we get the bearish order flow. We pull back into that new supply range, and then we end up taking that low and then sweeping this low, right? So yeah, obviously some environments can get a bit more choppy and complex, but this is how you can make some method of the madness. So hopefully that makes sense as always. If you have any questions, fire them in and I'll leave that there. Cheers guys.